Hey everybody, welcome to the Options Moneymaker Q&A session for February 5th, 2020. I'm Mark Dannenberg. I also have Aaron Rumley with me, and and Michael will be joining us a little bit later. Aaron, we have good sound?
Yes, absolutely.
All right. Just want to make sure you were awake, Aaron.
I'm here.
All right. Okay, folks, if you're brand new to the Q&A, or maybe it's been a while since you've been here, we're basically here to answer questions that you have about our products, about our services, about trading, about how to be a successful trader. We're happy to help you in whatever way we can. We primarily focus on primarily our questions are focused on the things that we promote most actively, which is the profit flow analytics chart. That's an excellent tool for identifying trends. We just recently completed our first masterclass for profit flow analytics, and as part of the masterclass, those attendees get access to the Cycle Finder Plus, which is an additional indicator being added to profit flow analytics. I'm going to share something regarding Cycle Finder Plus with you here in just a few moments. The live trading room, which we use for real-time trading and support. If you have questions throughout the day, you can pose those questions to whoever is facilitating the room. Generally, it's Michael and Aaron and myself. Michael and Aaron are there almost full-time. I'm there a good portion of the time. We have an options education program that's a very comprehensive program that Aaron facilitates. It's the Profit Builder Plus program, so if you're in that and you have questions, please ask. If you are looking for a source to learn how to trade options, like from the very, very basic beginning, what an option is, what a strike is, what an expiration is, Profit Builder Plus is an excellent program for you. Futures trading education, we have that available. We trade futures, we trade options. And the key to futures trading is learning risk and reward of the futures. If you have questions about that in the session, please feel free to ask. And then we do a limited amount of one-on-one coaching for people who have a desire to just immerse themselves in learning how to trade. And generally those sessions are custom designed to whatever meets your schedule. Standard program would be an hour a week for whatever period of time you want to sign up for. We do have a couple of coaching sessions available, coaching engagement sessions available. So if that's something that interests you, you can email me directly, mark@optionsmoneymaker.com. Before we get into the questions, sometimes it takes a little bit for the questions to start rolling in here. I just want to share something with you, and this is really relative to the masterclass that we just finished, and in particular the Cycle Finder Plus. So the Cycle Finder Plus is an additional indicator that's been added to the Profit Flow Analytics, and it is exclusively for those people who attended the masterclass. The reason is because it was and it ended up being a 5-session masterclass, because once we introduced the Cycle Finder Plus to the Profit Flow Analytics, there was more extensive education that I felt was required. And also, we added some tools. We added a very extensive tool called the Profit Sweet Spot Matrix that is helping traders understand what a reasonable profit target is on each of their positions. So you can actually, in the Profit Sweet Spot Matrix, set your desired percent win-loss ratio. Now, one of the most common questions I've gotten as a trading educator is, what's your win-loss ratio? And there are so many different ways to answer that. And generally, the people asking don't really even understand how to evaluate a win-loss ratio. They hear a number and they either say, well, that's good or bad. And that is so off the mark that they don't really understand how to think about it. So what we've done is we created a tool in a spreadsheet called the Profit Sweet Spot Matrix that allows you to use some data that we've provided, which is historical data on 4 stocks and 2 indexes. And then we also created a template that allows you to do some of your own historical research. And the reason that's important is because having that historical research available to you throughout every trading day allows you to set a profit target that's based on a realistic anticipation of movement of the underlying stock or index. Instead of the age-old problem of, well, I'm in the position, how much should I hold out for? What's a reasonable target? When is enough enough? Well, we've answered that question for the people who took the masterclass. And the answer to that question is, look at your profit sweet spot matrix, look at the data that you have. If you don't have the data, do the research ahead of trading that particular stock or index. And we provided historical data on 4 stocks and 2 indexes to help everybody get started. So the Cycle Finder Plus is a very powerful indicator that's helping people identify on daily charts when the trend is starting to shift. On intraday option trading time periods, when you could take an options trade middle of the day that has a high probability of maybe working out in terms of profitability that day, but you would be comfortable carrying it overnight based on the signals. And then very short-term signals, short-term time frames that we use throughout the day for futures trading, where we're getting into a futures contract and it is our desire to get out of that as quickly as possible. So I'm just going to give you a couple of high-level things. They're not intended to be a full education on this, but we, in the last 2 weeks since we initially released the Cycle Finder Plus to the Masterclass and started trading it with our live trading room audience and community every day, we've been trading Amazon, we've been trading Booking, we've been trading Google, we've been trading Shopify, we've been trading Tesla, we've been trading the S&P 500. These are not futures, folks. These are options. In addition to that, throughout the day, we trade the NQ, which is the NASDAQ futures. We trade ES, which is the S&P 500 futures. We trade RTY, which is the Russell 2000 futures. So in the last 2 weeks, those 5 stocks and 1 index that I personally have been trading actively, if you traded only one contract, if you traded just one contract of those 5 stocks and 1 index, and you followed each of the trades that we had taken, you're up about $9,700. That's just simply taking the Cycle Finder Plus signal. That's just simply taking the Cycle Finder Plus signal. It's a very powerful signal. Cycle Finder Class was discounted for the first group at $397. Now it's $597. But it's an investment that pales in comparison to the opportunity. And that's in addition to the opportunity that's been presented every day in terms of trading futures. Michael and Aaron do a great job of identifying the Cycle Finder Plus and the B and C signals on the profit flow analytics indicators so that you can follow along if you choose to. We don't take every single trade. It's just not physically possible for us to take every single trade. And each of us are trading our own accounts, and we have our own goals and desires of where we want to be each day. And so we may stop early in the day if we've hit our goal, but we're going to continue to support our community and help them identify signals. There were some amazing signals the last few days, the last few weeks, but Cycle Finder Plus is the tool that's really going to help you. The one we've been having a lot of fun with, I in particular have been having a lot of fun, is Tesla. We've been following Tesla. I've been reading the news stories, been reading the analysts' opinions about Tesla, been reading about all the people who go, well, I got to get into this stock because obviously it's going to continue to go higher. That stock has moved so high and fast. We've made money as it went up. We've made money as it came down today. And all of it is based on the both short-term and long-term signals for the Cycle Finder Plus. So if you're not part of the masterclass, it's well worth your time to attend. And that will allow you to get access to the Profit Sweet Spot Matrix. And that will also allow you to get access to the powerful Cycle Finder Plus. Cycle Finder Plus and Profit Flow Analytics are products of New Cycle Trading and Analytics, and we've been working so closely with them, collaborating extensively with them, that we feel like this is our baby too. We love it. We're benefiting from it, and we're just having a lot of fun with it. So, okay, so Gerald, absolutely, as I've told you before. So if you just be patient, you may not have seen the outcome that you desired yet, and it may be longer than you had wanted. But yes, so you really don't need to keep asking because the answer is yes. We've said that before.
Scott has a question based on the Cycle Finder Plus. When it's in between the buy sell zones, when the lead line crosses against you, do you exit mid-bar?
So you're in a trade, let's say you're short, and then it moves into the zone that's between the buy and sell zones, and it moves against you. Now, I never exit a trade mid-bar, Scott. I never exit a trade mid-bar. Now, if it reverses mid-bar, especially if you're trading off of a 10-minute chart, you don't necessarily want to wait another 5, 6, 7 minutes to get confirmation. You just tighten up your stop. And if you get stopped out, then so be it. But the way I will handle that is if I start to see the signal weaken, I will tighten up my stops. So if I'm trading NQ and I have a 10-point protective stop, then I may tighten it up to being 2 points behind the current price if the signal is starting to weaken.
And I think that leads into your questions are very similar to each other. And as Mark mentioned, we're not looking to take action mid-bar. So you're asking on the second question, if it enters either zone, do you exit when it starts to get into, so you're short and it starts to get into the buy zone, or do you wait for the cross to exit? So that's a great item to also research for yourself as well. If you're on a shorter intraday chart, I recommend, and I think Mark would back me up on this, that if you're short and it enters into the buy zone and you have a strong profit on the trade, there's nothing wrong with locking in a profit, guaranteeing yourself profit, but continuing to hold until that cross happens. So that way you're guaranteeing yourself a profit on the trade, but then at the same time, you're still allowing for additional movement. If it does, like you say, sometimes the price can continue to move in the same direction. You're allowing for that additional movement and then adjusting your stop along the way and exiting at the cross.
Yeah, there's a big difference, but it's a fine line between exiting when you get into the opposite zone versus tightening up your stop and protecting some of the profits that you have. Protecting some of the profits you have just guarantees that you won't lose on the trade, but it lets the trade continue to run if it's going to continue to move. But if you just close the trade as soon as it gets into the other zone, then I think you're that's too much of an abrupt action, and it's not letting you take full advantage of the cycle. So Tom's asking if we're providing futures trading results on the Cycle Finder Plus. Well, we call out the trades throughout the day, and we're excuse me, we're calling them out on NQ. One second. We're calling them out on NQ, and we're calling them out on ES, and we're calling them out on RTY. So we collectively, the three of us, do not take every single trade that's presented throughout the entire trading day. We actually open the live trading room now at 8:45, so we're actually open right now from 8:45 to 4 p.m. Eastern. But there's trades that are available at 8:30 and throughout the night. But the ones that we identify, you can keep track of those, and it's pretty easy to go back and look at the trades. It's very easy to go back and do a replay on the Cycle Finder Plus, and you can determine what the performance was if you were someone who was taking every single trade. But Michael does a great job of identifying the signals. Aaron identifies the signals and alerts the room. Some people in the room will take an ES trade. Some people will take both an ES and an RTY trade. Some people will take only NQ. So there's so many different variations of those signals being traded that we don't actually track all of them. We don't track and publish all of them, but if you're in the live trading room, and you only need to be in there for a week to understand exactly how powerful it is, then you can certainly track those yourself. Or if you have access to the Cycle Finder Plus, if you were part of the masterclass, then you can go do a review of those signals. They're very easy to spot.
And we've already given you a head start. If you were in the master class last night, you saw the updated profit sweet spot matrix with the intraday tracking. And we have a start of the futures trading results based on various trackings, 10-minute or 3 and a 10-minute that you can build off of as well.
All right, Bob's asking regarding futures trading with the Cycle Finder Plus, when setting an initial stop loss, so you only set it according to how much risk tolerance you have, or do you ever use market volatility and price movement of a particular market to determine how large a stop loss to use? Well, the stop loss has really 3 parts to it. We're talking about a protective stop, so that if there was an unexpected, abrupt, major impulse move, you don't want to be subject to a huge drawdown based on that. So you have a protective stop that is set initially when the trade is placed. That protective stop should be based on a combination of your personal risk tolerance plus your experience rate with trading that particular futures contract. So if you're trading NQ, you might set a 10-point protective stop. If you're trading RTY, you might have a 3-point or 4-point protective stop. On ES, you might have a 3 or 4-point protective stop. Some of it is based on your experience with those different indexes, and you can certainly, in the live trading room, if you're there with us, Bob, ask for some guidance from Michael and Aaron and myself. The second part of setting a protective stop, beyond your personal risk tolerance, is it should always be based on the chart. So you can open your position, you can automatically place a protective stop, say at 10 points on NQ, and that gives you time then to go evaluate fractals. Fractals are an excellent way to set a protective stop. So let's say that there was a fractal that you wanted to use, you felt comfortable using on NQ, and that would adjust your protective stop to 8 points. Or maybe it adjusts it to 12 points. And if 12 points is within your personal risk tolerance, then you can adjust it to that, because now what you've done is you've set a protective stop that is based on the chart and based on price pattern. The fractal is a valid price pattern element on the chart that you can use to say, if the price were to move beyond that fractal, I probably don't want to be in this trade. So you set your stop there. And then as the price moves perhaps against your position, which it will periodically, then you keep your eye on the chart and you make adjustments to your stop when the chart indicator alerts you that this trade may be starting to weaken. So let's say you are short on NQ, you had a nice Cycle Finder Plus cross down from the sell zone, and you don't have a profit yet on the trade. The price is actually moving against you, and now your Cycle Finder Plus has crossed back to the upside, and you're 3 points behind on the trade. Pull your protective stop down and don't let yourself be stopped out for 10 points or 12 points of loss back to the fractal. If the chart is indicating that this signal is reversing or weakening, maybe pull your protective stop down to 5 points, and you might risk another 2 points on that trade, but you're not going to risk the additional 5 to 7 points. So bottom line is initially your protective stop should be based on what your risk tolerance is and some experience rate that you have on that particular index. And then beyond that, use the chart as your guide. I've had some situations where the price is moving against me, but the signal is still telling me to stay in the trade. I've had 20-point drawdowns on NQ, but the signal is still telling me to stay in the trade. And so I will move my stop out of the way so that I can stay aligned with what the chart is telling me. And then if the chart reverses, well, then I might have a bigger loss. But if the price reverses, which is what happens in most of those cases, that I've had a bigger drawdown, if the price reverses, then I end up having a decent trade. So I hope that helps answer your question, Bob. So Aaron,
Yes.
did you look at Tesla?
Oh my gosh, I was so afraid you were going to say Tesla, something about that. And I had faith that maybe you wouldn't be talking about it, but no, I've never heard of Tesla. Why don't you tell us
Oh
about
my
Tesla?
God.
I don't think
That
anybody that's in the live trading room knows what Tesla is.
that stock is so much fun to watch this week. Oh my God.
You know, something we should probably cover
Mhm.
in this Q&A is the very odd movement
Mm.
of
Yesterday in particular.
the put that we held that generated a profit even
Well,
though the stock was moving higher.
it was the most bizarre thing. The options on Tesla were out of sync with the price of the stock. And that can only be because there was a tremendous amount of shorting on the stock. In fact, I read a headline yesterday that Tesla was the most shorted stock in the market because everybody expected the price to go down while the price was continuing to go up 100 points a day. But yeah, Aaron's right. So we were all observing that the price of the stock was moving higher yesterday. And so I was expecting the price of the put option to be moving lower, but instead we actually took a profit on a put yesterday of what was it? It was $3.30 of profit on a put while the stock moved higher. I could have sworn we had a call.
Yeah, I think someone made a comment in the room that this is the one rare time where both the puts and the calls were experiencing raises in the option prices at the same time.
It was just,
It
was
was
fun.
bizarre.
It was fun. Oh, but anyway, and then Tesla was down 165 points at some point today. So
And we were still holding puts for that.
David just commented that there's an article that more than 50 million shares changed hands.
Goodness.
Yeah, that's a lot of shares, and there were a lot of people that were in a short squeeze. They had shorted the stock on margin. Stock price kept going higher. The stock price, I think, don't hold me to these numbers. We were talking about it a lot yesterday, but I think stock price was up $300 or $400 in the last week and a half, something like that. And there were all these people that were shorting the stock, and they just got so far behind. They got margin calls. Then you got to buy it back to cover, which generates a whole round of buying all by itself. So I don't know about those folks, but I know that we had people in the live trading room that were loving their profits on Tesla. So
Now I have a question.
yes.
What was more fun, Tesla or Amazon?
Well, now come on, can't we just enjoy both of them? Because Amazon on Friday was just incredible. Um, we we had a call that we opened on Thursday. Is that the right? Hold me.
Wednesday.
Wednesday. Okay, we opened a call on Wednesday because we had a signal that Amazon might move to the upside. And it didn't hit our profit target. So off of our profit sweet spot matrix, which Erin created and is just phenomenal, she created it for the masterclass. It told us what the underlying stock should potentially move, and then we can multiply that times our delta, and we can set our closing order for a profit. And I think we were using an 80% win rate.
Correct. Yeah.
And it didn't hit our closing order. It didn't not hit our what's called a good till canceled order, if you're not familiar with trading options. It
Not
did
on
not hit
Wednesday or Thursday.
or Thursday. But we got into Friday, and earnings announcement was Friday after market close. And was that right? Thursday.
Thursday
No,
after
Thursday.
market close.
Thursday. See, that's why I have Erin here. She
Because we
keeps me
exited
honest.
Friday.
Yeah. So.
But the chart told us to hold, so it didn't hit our sweet spot Wednesday. It didn't hit our sweet spot Thursday, but nothing on the chart told us to get out.
Correct. However, we did make an executive decision. Erin and I talked. We made an executive decision. With Amazon reporting earnings, that stock can go big either direction. We were holding a call. So we decided to protect ourselves, and it wasn't a short-term call. We had 2 or 3 weeks left to expiration. So we decided to buy to open a put before a market close. We did it in the last half hour of the market. What we know about straddles and strangles, we teach them in Options Moneymaker, part of the Profit Builder Plus program. But what we know about straddles and strangles is if a stock moves substantially in one direction, the profit on that direction can, and most likely will, far outweigh the loss, assuming a 100% full loss on the other side of the equation. So we decided to, since we had not hit our good till canceled order exit price target, we decided to add a put. So we bought that put for $8.65. And on Friday morning, when Amazon was up, I don't know, at one point it was up like 240 bucks,
Right,
250
yeah, I
bucks
don't
in
remember what it
pre-market.
opened up.
Just insane. Anyway, we ended up closing our call option for just over a $66 profit. So you take out the $8.65 of cost on the put, and that's a pretty darn good profit for holding Amazon for 2 days.
Absolutely. Not to mention the conversation we got to have in the morning about calculating where we were going to put our stop, or our GTC based on what we were seeing in pre-market. And we undercalculated, which was fine because Amazon did end up dropping right after open, but you got that awesome favorable fill, which wasn't just a mark favorable fill. We were having so many people in the room tell us about their favorable fills too, and people were out. I mean, right at like 9:30, they exited that trade for, again, about a $66 profit per share.
Well, I'm looking at it right here on my trading platform. I'm looking at the final P&L on it. Opened it at $10.50 on the 29th and closed it for $77.15 on the 31st. Now, if it had gone the other way, we would have had a liability of that $10.50 on the call, but we would have likely made enough to offset that plus a profit. So anyway, they were
and I'm
both
looking
fun.
at the closing order. Because you had it set prior to market open, you were filled and out 3 seconds after 9:30. 9:30 in 3 seconds.
Yeah, that was a fun trade. And I got a $22 favorable fill.
Yes, you did. 22 and 15 cents.
So anyway, what did you have more fun with, Erin?
I think Amazon, because there was the hype on Thursday after market closed, where we could start seeing it all roll in. Oops, sorry. Amazon's talking to me. Because I'm talking about this, but we got to see the hype of it, and you and I just kept seeing the price go up and up and up and up and up as they were doing the post-market.
Yeah, that was a fun little 635% return. Just saying. So anyway, they're both fun. So the real takeaway from this, I think the headline is these aren't just one-offs. Yeah, Amazon was a much bigger move than you're going to expect on most stocks, but Amazon can move that much. Tesla won't move that much usually, but recently it has been. Booking is another one that can actually move that much. It's a $2,000 stock. So we're trading a portfolio of stocks that when we use these with a Cycle Finder Plus indicator and we use the right time periods, which are taught in the masterclass, it's it's pretty golden. It's great.
Jack's asking what call it was. It was the February
Or
14th, 2000 call.
2000 call.
Ended
Yep.
up being in the money about what, 50 points when we
That I don't
closed
remember.
it.
I think it
I
might have
think it
been.
was
Yeah.
55 points because I think I remember you just putting the closing order at what the in the money value was going to be.
Mm-hmm. So Michael's asking, when filling out the profit sweet spot matrix for the crosses, should a person check to see if the cross is right at the beginning of the time frame versus the cross being delayed? Generally, we recorded on our historical data only the crosses that obviously appeared right at the beginning of the time period, beginning of the day. We generally don't record mid-day crosses. If you're looking at midday crosses, we're looking at an entire different time period in order to validate that cross.
And something I thought of today is if you don't want to do a bar replay, if you have your alert set up in TradingView, you can just look at your alert log and see exactly when those crosses happened to know about what time they did, to know if it was at the right at market open or not.
Joe is asking, how do we choose Tesla to be in the profit sweet spot matrix data? So towards the end of last year, Tesla really got my attention with analysts coming out with all sorts of projections. There's one analyst out there that is projecting Tesla's going to be a $7,000 stock. Okay, I'm probably not going to buy the stock and hold it until it's 7,000, but that's kind of interesting. But I like to look at consensus of analysts, and there were just some really interesting summaries out there. And as I started to take a look at the historical data, it gave us some activity that looked like, based on the Cycle Finder Plus, and looked like, well, it just looked like it had great opportunity for us. So started tracking it in real time, started trading it, and then put the data in the profit sweet spot matrix. There's some other stocks too, Joe, that I intend to do some research on and add to our active base. But since we created the profit sweet spot matrix, for the most part, I am only trading the 4 stocks and 2 indexes that we have the research on, because I've got a historical basis now for knowing what to set my profit target at. I've got a historical basis for knowing that an 80% win rate generally means that the stock's going to move X number of points, and I can trade whatever delta I want. I can go out to a 10 delta, I can trade a 50 delta, I could trade an in the money 80 delta. Whatever delta I choose to use, I can factor that against the 80% win rate anticipated sweet spot, the anticipated movement of the underlying stock, and I know exactly where to set my profit target goal. And then I put a good till cancel order on it and then let that go. Yeah, Jack, if the cross happens in the first minute, now I assume you're talking about a daily chart. If it's happening in the first minute or even the first couple of minutes, that to me is a start of the day cross. I'm going to take a look at some other factors, but that qualifies to me. I'm just avoiding the ones where they're crossing midday. it finally decided to cross midday, because you're going to get an artificial reading then and performance reading. If it crosses midday but the stock's already moved 30 points and you're recording the open of the bar that day, well, you're going to get some false information in your history. But if it crosses in the first minute or two of the market and the price is reasonably stable to the open of the day, then I think it's a valid entry to record in your history.
I would agree, especially because some can have a slight delay. I think NDX generally has about a 15-second delay before its first print. So I would agree within the first couple minutes. Joe's asking, if it crosses midday, do you look at it differently the next morning?
A little bit, Joe. If it crosses midday, I want to take a look at where the cross is, because on a daily chart, we'll take the cross at any point in the range. If it crosses midday and it's in the sell zone or the buy zone, I'm generally not going to give it a second thought. I'm just going to go ahead and take the trade the following day. If it crosses midday and it's in the middle of the range, then the following day, I'm probably going to look at the 10 and 30 minute and see if I have alignment on those two shorter time periods. So that's the way I look at it. But the history that's recorded is simply taking the cross regardless of where it is. So there's that history, and then there's the real-time trading, and I'm factoring in a little bit of qualification on the real-time trading. And frankly, Joe, there are some mornings, like I think yesterday, we had too many crosses right out of the gate that I would want to take. I don't want to take all of them. So we start filtering through, and the ones that are in the buy or sell zone have more weight to me than the ones that are mid-range. And if I have 1030 alignment, that's even more weight. So if I'm filtering, I'm going to use those factors to kind of filter down to, if I had 4 signals and I only want to take one trade, that's how I'm going to narrow it down to one trade. Unless it's Tesla, then I just take Tesla. I don't really mean that. I'm just trying to see if Aaron was still awake.
Yeah, I'm here. Don't worry. Tesla, that was like an alarm clock. It wakes me up.
Somebody told my wife that we ought to rename our puppy Tesla.
I don't know who would have done that.
I don't have any idea, Aaron.
I like how you narrowed it down to 3 people, including me, of who could have possibly done that.
Yeah, there are only 3 people that would have said that to her. I don't see any other questions out there right now. We'll hang out here for just a couple of minutes, see if there are any additional questions. I will tell you, folks, I've been doing this for over 30 years, and what New Cycle Trading and Analytics created in the Profit Flow Analytics and Cycle Finder Plus is golden. What Aaron and I created in the Profit Sweet Spot Matrix provides so much valuable information that it makes you realize that most traders are trading a little blind. Profit Sweet Spot Matrix opens up your eyes to, you can control your own percentage win-loss ratio. You can have better data on where to set your profit target. You know the answer to the question every trader is asking, when is enough enough? You know all that. So those two things combined, and then what we released last year, the personal trading plan, just kind of puts the icing on the cake. And if you put those 3 tools together, there's absolutely no reason whatsoever that you can't be a successful trader and that you can't have more success than you've ever achieved It's just a phenomenal combination of tools, and frankly, we're having a lot of fun trading them. Jack is asking, which put did we pair? I want to get that for you here in just a second, Jack. Did we pair with Amazon? What is it, Aaron?
I thought it was the 1750. Yeah, it is.
1750, same expiration.
I don't remember how far out of the money it was. We picked that strike based on it having a similar
points.
Current delta to the call.
Yeah, it was about 100 points out of the money when we opened it. We paid $8.65. Michael's asking, since we're updating the profit sweet spot matrix daily for those stocks, we'll be sending out updates throughout the year. We don't have plans to do that. We have put the tool in your hands. We gave you a year's worth of data, and it's up to you to update that now and start tracking on your own. You also have a blank template. So for those stocks or indexes that we did not provide any data on that you want to do some research on, you can use that blank template and you can track that data yourself. Now we may have an opportunity down the road, maybe mid-year, where we may do some research on some additional stocks and indexes, maybe some intraday tracking. It's time intensive for us, so we would let you know if we're going to make that available. D'Angelo's asking about Craig. Craig has a desire. Now, Craig is the head of programming and development for New Cycle Trading and Analytics, and he stated in a Q&A a couple sessions ago that he has a desire to set up an account for himself, trade the profit flow analytics signals, particularly the Cycle Finder, and to grow his account to $1 million. We're in the process of setting up a community board that traders can pop into and check up on things and post questions and comments and opinions. And Craig's going to be posting information regarding his 1 year, $1 million goal there. So I don't believe he's started it yet, but we certainly are going to let you know when we have when he has that out there. So David's asking if we've given any more thought to doing alerts for the daily cross trades. We're having some discussions about that, David, but right now we are not ready to do that. Frankly, the daily crosses, I think, are better traded with you being present for the first 10 or 15 minutes of the market. Find your trades, set your trades, look at the expiration, look at the strike, set your good to canceled order. We may decide to use to offer an alert service on those, but right now I'm finding that some of them move so quickly that we wouldn't get the alert out in time. Which one was it yesterday, Aaron? Was it Booking?
That Booking, was done, I think, within a few minutes.
Yeah, we were out of that in 7 minutes, in and out in 7 minutes. So that's not at all off the table, David. I know you've asked about that before, but I'm still considering what the most effective way to do that would be, how many we would want to send out, and what a service like that would look like. Yeah, Jack, I think we're pretty close to that. Jack's just saying thinks it would be great to have an open chat site. When I say we, Craig and I have been talking about that. It's going to be set up to support news cycle trading and analytics, but we'll be part of that too. So as soon as we have it ready to go, we'll send out an announcement and give you information on how to access it. Futures are kind of flat right now. And Dow futures are actually down $2.85.
Whew, it's huge.
See, I didn't say 285. You would have thought it was down 285 because that's what it's been doing. Russell is up $1.78. Nasdaq's up 7. So futures are kind of flat right now. After hours trading on the stock that shall not be named, Tesla, are down $6.70. I've never enjoyed trading as much as I do right now, folks. I mean, I've always enjoyed trading and had periods where, had huge success, had other periods where much more challenging. But I got to tell you, these tools are the tools that every trader should have. And if you're looking at the cost of the tool, it's a fraction of what you can possibly make if you pay attention to what you're doing. Even if you just show up to the market the first 10 or 15 minutes and take, the daily crosses and put a good till canceled order in to close. There are trades where I'll put it on in the morning, and then I shift my attention to trading futures. Then I'll look back at my options trading account and realize that position closed out based on the good till cancel. So it's powerful if you're really serious about being a trader, and the way to get yourself completely immersed in that is the masterclass. So if you haven't already taken the masterclass, I think it's something you need to consider doing. Yeah, Joe's just saying, listen to the three of us interact and discuss the market in pre-market is great. Yeah, I thought that it would add some value, Joe. We had to get Aaron up earlier, otherwise we would have started a couple of years ago. But I paused there for a minute, Aaron.
You'd have beat me down until I finally caved.
No, I think that the 45 minutes is a good amount of time before market open for us to consider what the pre-market activity is on any of our positions we hold, what pre-market activity there is on maybe a stock that had a midday cross, and it also gives us a chance to take some pre-regular market futures trades, and sometimes there are some really phenomenal opportunities just in that 45 minutes. So anyway, I'm glad that you're enjoying it, Joe, and I appreciate your comment. Thank you. Michael's saying on an NQ in the morning, it seems like quite often the live trading room initial trades hold off until the first reversal. I would say that's not my perception, Michael. We're really just looking for the first good setup. We're looking for the 3 and 10 to be in alignment. I know this morning that actually happened at 8:40, so there were some great setups just at 8:40 before 5 minutes before the live trading room opened. I took 2 of those trades this morning at 8:40, but we're just waiting for the setup, and if we don't have alignment, we're not entering a trade. Michael, if you see that, I mean, if you see something happening that you're not quite sure about, just ask us. We'll be happy to answer it in the room in real time. All right. I don't see any other questions out there, so I think we're going to go ahead and call it a day. And we're going to start over again tomorrow morning at 8:45 in the live trading room. Hope to see all of you there. Masterclass is available if you've not already taken it. And the great part about the masterclass right now is you get all 5 sessions all at one time, and they're each about an hour long, so you can decide when to immerse yourself in them. You can do them all in one sitting. You can do them all at one time. We did them spread out over a period of 3 weeks, but you'll be able to immerse yourself in them, so now's the time to do it. For the time being, Jack, that is true. For the time being, we are opening the live trading room at 8:45. If that changes, we certainly will let you know. All right, Aaron, thank you. Thank you very much.
Thank you. Thanks everyone for being here.